The fair tax mark is a brand new business standard in responsible tax behaviour and reporting. As you can see from the slide, and Paul's mentioned this already, it's based on two key principles. In very simple terms, we say that the fair tax mark, when you see it by a business, proves that a business pays the right amount of corporation tax in the right place at the right time, but importantly, no more. And we say, secondly, that a fair tax mark proves that a business is transparent, clear, and can be held accountable, and this is a key factor, by the public. In very simple terms, this shows that a company is not avoiding tax, and the second principle shows that you don't have to take our word for it. You can go and look at the company's disclosure and find out for yourselves. But away from this definition, what the fair tax mark is really about is the steadily growing number of businesses that are bringing these principles to life. They're becoming aware that tax is the important ethical issue that Paul has said, and are leading by example in terms of their behaviour. We're delighted that so many of them are here today. By reaching out and achieving the fair tax mark, businesses are showing that despite all the scandals, the loss of trust, and the public perception that Paul has alluded to, not all businesses are actually at it and dodging tax. There are plenty of businesses out there that choose not to engage in tax avoidance because they believe in contributing their fair share of tax to society, and because they know that paying fair tax is actually good for business, that tax itself pays for vital services, infrastructure, and the healthy and educated workforce that business needs to thrive. But it's by making this point publicly that businesses can encourage real change. Fair tax businesses empower consumers and the public in two ways. They offer them a choice of where to spend their money, and also gives them the power to hold those companies to account. This in general brings, we hope, more people into the debate and encourages other businesses and actors towards positive behaviour too, in a kind of positive feedback loop. While we realise that the fair tax mark by itself is no substitute for real legislation, it can definitely be a good complement to it. It sends out, we think, a really powerful message. What better way is there of showing up bad behaviour than celebrating the really good behaviour? And what better way of undermining the argument that still exists out there that tax avoidance is just still part of the way that people do business, than showing clearly that some companies choose to do this, and whilst others do not. Okay, so let's return to the detail a little bit and get into the nitty-gritty. Who is the fair tax mark for first, and what does this accreditation process entail? The fair tax mark is currently for UK incorporated companies of any size. We have two versions, one for businesses that only operate in the UK, and another is for UK multinationals. You can see our criteria guides and download them from our website too. This, unfortunately, just covering UK businesses leaves out the Starbucks and the Amazons for now, but we do have plans to develop new standards in the future, and believe that ones that we do have here could be easily adapted to work in other countries and other contexts. So here now is where it gets a little bit technical, but I've drawn the straw to tell you how it all works, so you'll just have to bear with me. Okay, so what we actually do when we accredit businesses is assess how they currently perform against the relevant standard, UK or multinational, and then we work with the company to help them fulfil enough criteria to be able to achieve accreditation. Every company we've worked with so far has had to implement significant changes to reach this threshold that we have. So we use a scorecard, and the criteria themselves are arranged into categories. First up, we have basic transparency. This is about a company telling us what it does, where it's based, which directors can be held liable, and who its real beneficial owners are. These issues in particular have tax implications for the smaller and often UK-based companies. Next category we have has been alluded to by both previous speakers, which is public country by country reporting. As we've heard, it's going to come in as a standard in 2016, but it's not going to be made public. We are a voluntary way in which companies can reveal for the first time the profits they make in every single country that they make, and in every single country where they operate, and where it pays its taxes. We think making this information is absolutely crucial, as it gives a good indication as to whether the company's profits and tax are in line with the real economic activity that they're undertaking, i.e. it really helps to show whether they're engaging in shifty business and avoiding tax or not. The third category that we look at is tax policy and compliance. This is a major component of our criteria. This is about the business making its approach towards tax public, and in the process making a series of commitments. These commitments are to not avoiding tax, to not using tax havens for tax avoidance purposes, and involve proving that they have a governance structure in place that enables them to implement this policy. And again, we don't necessarily take their word for it. We demand that there is the policy, but also that it's backed up with clear communication and data as well. And finally, the final category we look at is tax rate and disclosure. Here, as would seem obvious with a fair tax mark, we reward a company if it appears to be paying near enough the headline rate of tax, the expected rate of tax over an average number of years. But the key to this category really is explanation. If a company, for example, and this often happens, is paying less than the expected rate over a number of years, but can explain it in a legitimate manner, for example, they've put money into a pension fund, they can still score points back in our system by clearly explaining that this was a legitimate way of reducing their bill. Okay, so that's the technical part. What have we done so far using these criteria? Well, considering we've only launched in February of last year as the world's first independent accreditation scheme on tax, as far as we know, we've come quite far. Much of that is thanks to all of the people who's dedicated time, effort and resources to the project. Here I have to mention our investor members who've helped us set up ourselves as a community benefit society, our wonderful team of technical tax experts from across different fields who've dedicated their time voluntarily to help design our criteria, and the many others who have volunteered and offered their skills, time and energy in different ways. But of course, it all comes back down in the end to the businesses. So far, we've accredited 10 businesses and are actually, I can say, in various stages of the accreditation process with a further 10. So we will be doubling in size over the next few months. And beyond that, we're in discussion with many more beyond them. Back in February 2014, our 3 pioneer businesses, that's Mid-Counties Cooperative, the Phone Co-op and the Unity Trust Bank, launched the Fair Tax Mark by being willing to take that crucial first step, that crucial first leap forward on this issue. They replicated the leadership that co-ops and other social enterprises have taken on other issues, such as fair trade. Later came others, big and small, such as Go Ahead Group, SSE, which sponsors the conference, Staffline, Bitemark, East of England Co-op and Lush Cosmetics. These businesses have all shown that an approach to tax can be driven by values and not just profit, and that you can still run a successful company and keep shareholders happy even when you're doing the right thing. Thank you.